Well, as we look forward to the year 2019, most experts agree that volatility is here to stay, at least for the first few months of the new year. And keeping it stock-specific would perhaps be the best way to navigate these turbulent markets. But the question then is, which would be the stocks that you should keep on your radar going forward? Well, we have Vineeta Sharma of Narnolia Financial to talk about some of her top bets for 2019. Vineeta, thanks very much for joining us on the show. Let's start by talking about the financial space, because this has really been the eye of the storm as far as 2018 is concerned. It wasn't just PSU banks, because that's been the story for the last few years. You know, this time around, at least for the latter half of 2018 calendar year, it has been that big crisis that we saw for the NBFC space. Liquidity has been pressure, and there's been a fair amount of concern ever since that IL&FS crisis. But as we close out the year, it does look like things are getting slightly better. So talk to us then about the financial space. What's the view on NBFCs after the kind of correction that we've seen so far, and which would be the name that's your top pick?
So regarding NBFCs, there has been a liquidity crisis, and we've been speaking that we should stick to those companies which have a good parentage, because that's the place where, you know, there will be lesser liquidity crunch, because the parent would always be there for support. In this context, we have a pick which is Canfin Home, and recently it has gone into a good price correction, and I think it's at a price where one can accumulate, considering there are 3-4 reasons for its correction, and that can be the reason for its growth going forward. One is the asset growth, which was not coming because of, you know, RERA problem in the home state for Canfin Home, and that asset growth right now is picking up. Secondly, the asset quality for Canfin Home is pretty stable, so that's the thing which gives us confidence. Third is your liquidity issue, because of better parentage. So liquidity issue has not been a major problem for Canfin Home. Also, we have seen it has been able to raise funds quite easily in this last 6 months. And fourth, which is the most talked about thing, is the net interest margin for most of the home segment. In the net interest margin, Canfin Home, on the if you look at the spread, we are assuming that because they have raised the interest rate for most of its product, so that will support. And secondly, on the cost side, the company has been able to refinance its loans from the NHB. So I think overall the spread I think it has bottomed out, and Canfin Home at this current valuation looks to be a better pick going forward in the NBFC space.
All right, so Canfin Homes is the preferred pick as far as the NBFC space is concerned. If you pull up a YTD, you get a sense of the kind of pressure that it's come under. It's down over 35%, so nearly 40% cuts. But in the last month, like Vineeta was pointing out, we've seen a fair amount of traction return. We have seen an uptick of about 11% in the last month or so. And of course, if you look at the last quarter, it's also in positive territory. So up about 22% for the last quarter also. But let's talk about then the space in terms of the entire capital goods space, because this is very much been in focus. We can expect it to be in focus going forward as well. L&T is a name that you have, you know, on your list in terms of one of your picks for 2019. Of course, you know, on the order book side of things, this is one of the strongest companies in the space. It is also a market heavyweight. What's the view that you have in L&T, and what kind of target are you expecting in the next year?
So L&T, Nivrita, if we look at it, it has given bold targets for the company to achieve by FY21. The company has a target of achieving an annual revenue of 2 lakh crore by FY21. Secondly, the working capital ratio, which has working capital turnover, which is a major problem for the infrastructure segment. So that the company is expecting they will come down to 18%. From 24% to 18%, and already they have achieved around from 24 they have come down to 20% in half year of FY19. So achieving such a good working capital turnover would be a very positive thing for L&T. Thirdly, it is already getting out of non-core business, and that will help the company to maintain the ROE and ROA, ROCE of the company going forward. All these three, if we look at the infrastructure space, L&T is best poised, and also not only in terms of order book and the presence that it has among the space, but also internally the balance sheet is getting much in control. So on the infrastructure space, we have L&T, we have 1650 target for L&T. On the industrial space, another company which anybody can look in is Cummins India, which is on the component space. So because we are seeing some kind of positive news or positive things coming up in the private capex also, and the company has come up with new products, management is confident of the growth, and even the margins will be under control given the asset prices getting down a little bit, and also the exports getting bigger.
All right, so L&T as well as Cummins India, absolutely. Just a final a name that I want to ask you about. We're just running a little short of time. Marico, the FMCG sector, also has sort of come back as we end the year, and we can expect, with the kind of impetus coming in various regulatory measures being taken by the government, that consumption demand should pick up as we go into 2019 as well. What's the view on Marico?
So Marico, we have a price target of around 440 for Marico. And if we look at the main problem of Marico was Saffola not giving good growth, as well as the modern trade, which was not panning out very well. So with the last 2-3 commentary that we have had with the management, we are confident of that turning around in favor of Marico. Also, the copra prices has been declining, and that will cushion the margin, and in fact, there is a room for margin expansion for Marico. So, considering these two logics as well as the international business turning around in favor, I think Marico is one stock where, on a risk-reward basis, I think in the FMCG space, one can look into that stock.
All right, so Marico is one of the picks from the FMCG space. Of course, L&T, like we just discussed, Cummins India, and Canfin Homes from the NBFC space. Thanks very much, Vineeta. Appreciate your views. These are the names to keep on your radar going ahead, and wishing you a very happy new year in advance as well. But let's shift focus then. Let's put the focus on the auto space. It's been in the slow lane. If we talk about the year 2018, the BSE Auto Index is down about 22% over the last year, but we have seen a slight recovery set in for the month of December. December is